Hello everyone, welcome to my channel. My name is Orlando, and someone asked me the question, Orlando, should I sell my investment property in this hot market? Well, number one, I would ask myself, what is the purpose of me selling my property? And a lot of times people don't ask themselves those questions. They just see the dollar signs. It's like, dollar signs in their eyes, and they're just like, hey, I'm gonna make a ton of money. Why not grab this money and just go? You don't think of the implications of you selling your property. And so you have to figure out, why am I selling this property? Am I selling this property to buy a Lambo? Am I selling this property because I got some medical expenses that I need to pay off? Is it a necessity type of thing? Is it you're trying to buy another property? Are you taking it out for, to go on vacation? Like, you need to figure out the reasons why. And then number two, how hot is your market? Has the appreciation of your property just skyrocketed? Is it like Boise, Idaho, where it's just like, $300,000 increase on $150,000 homes? Or is it a modest, $50,000 that it has increased? Is the rental market still hot? Is that area being developed? Do you see more appreciation happening in that area? The question at the very end of the day, you're asking yourself all these questions and you're saying to yourself, at the very end, is there more money to be made on this property? Is there a chance that I can see a substantial growth in this property if I hang on to it? That's one of the big questions you're gonna have to ask yourself. And a lot of times people, they just see the dollar amount and they can't look in the future. When I have decided to sell properties, I think to myself, okay, how many jobs are coming to this area? Is this area continuing to grow? Am I seeing, things being built, amenities being built around the property that I own? If I'm seeing all of this stuff, I would think to myself, I think I should hold on to this. If I think that the market has capped out, or I think that, wow, the amount of money that I spent versus the amount of money that I have gained in appreciation is a good chunk of money, I may sell then too. But let's go on to number three. Number three is, what is the price that you're going to pay by selling this property? I will tell you guys right now, I will never sell a piece of property if I cannot do a 1031 exchange. And for me to do a 1031 exchange, I will have to have another property ready to go or being ready to purchase in 180 days. That's the rule. If you have rental properties, when you do your taxes, you get depreciation every year on the properties. I like to call it invisible tax write-off, because that's what it really is. Now, if you decide to sell your property, you're gonna have to pay that all back. It's a tax on the depreciation, on the invisible tax write-off that you got. Now, I prefer not to pay that back because it will be a hefty amount of money. But if you do a 1031 exchange, that can be kicked down the road and you will not be charged the recapture tax that you're going to get charged for the depreciation. Now, guys, I know this may sound difficult, but I'm just trying to tell you, there is just no reason why I would sell a property and then get hit with the recapture tax, which would be 10, 20, maybe $30,000. Why would I do that when I could take that $10,000, $20,000 and reinvest it into another property? So you have to take all of these things into account and think to yourself, okay, if I take out this and I sell this property, I make $100,000. You have to remember too, you're gonna have to pay closing costs, you're going to have to pay commissions. Once you sell all of that, let's just say out of that $100,000, you jump down to 80 grand. Well, out of that 80 grand, you're gonna pay 30 back to the IRS. Then you're gonna get hit with capital gain tax on top of that. So at the end of the day, you may only come back out of that with like $40,000. Now, does that make sense? You sold a property, you made $100,000 on it, but after commission, closing costs, capital gains, and paying back recapture, what do you end up with? $40,000? Does that make sense to you? Now you're thinking to yourself, oh no, I wouldn't sell for $40,000. I wouldn't sell just to make $40,000 at the end of the day when I just gave away 60 grand. Just disappeared, which you could have invested into another property. Now, that's the way you need to think, guys, when you sell a property in this hot market. Does it feel a little bit different when you're dealing with bigger numbers? Yeah, it can. If you bought a property for 150 and it's now worth 600, $500,000, it sounds a little bit different. But remember, bigger numbers means bigger expenses. That commission is going to be higher because it's a higher dollar amount. Remember, the taxes, capital gains, those are all based on percentages, and you will pay higher because it's a higher dollar amount. So once again, guys, I hope you got value out of this content, and I'm gonna need you to watch this next video to get you into your first rental properties, or 2, 3, 4. Let's go for 10 rental properties. I'll catch you guys in the next one. Thanks.